All right, everybody. So we're about, is it 11 hours away from the biggest party in crypto? Is that right? Check my watch. Bitcoin halving is coming up, guys. I don't know if you heard. What is the Bitcoin halving, Greg?
It's the World Cup of Bitcoin, David.
Okay.
It refers to the mining rewards that go to those that process the Bitcoin transactions on the Bitcoin network. So today, pre-halving, the entire network earns 900 coins a day. So every 10 minutes, a block is rewarded, and that block will pay 6.25 Bitcoin to the random miner that sort of solves the blockchain for that single block. So it's like a $400,000 reward. The halving refers to the algorithmic cut that's sort of pre-baked into the Bitcoin code.
Okay.
That will cut that reward from 6.25 Bitcoin down to 3 1/8 Bitcoin. It's approximately every 4 years, which is how it's set up.
Okay, so Jihan, you're telling me that you're now going to only make a function, if it's a mining pool, of 3.125 Bitcoin every 10 minutes or so, if the reward is one. Meaning, you're a Bitcoin miner, right? Are you about to get a pay cut?
What?
Are you about to get a pay cut? Are you about to make less money?
No. I started Bitcoin mining since 2013, and I've already experienced 4 times of Bitcoin halving. Every round of Bitcoin halving, the company previously I co-founded Bitmain, the revenue and the profit goes up significantly more than next round.
And to be very clear, your Bitmain was the largest supplier of ASIC chips, for example, so tightly related to the Bitcoin mining space.
So because after every round of Bitcoin halving, the Bitcoin price surges up, and the whole industry gets much bigger than before. So every business in this industry gets much bigger than before.
I mean, we've seen some of the numbers. The first Bitcoin halving, it was something like $12 per Bitcoin. The next time it was about 600 some odd dollars per Bitcoin. Then it was $8,600 per Bitcoin, and today it's about $65,000 as I speak. Munib, is it going to be the same way? I mean, look, at the end of the day, cycles almost always end, don't they?
Yeah, I think my view is that it's not like history always repeats itself, but it sort of rhymes, right? So I think you can look at the past historical data, and then it captures the people's behavior in a way, right? So it's on-chain data capture of how the markets and people reacted to Bitcoin halving, and I think human behavior doesn't change that much, right? So you can project that a little bit forward.
So this could just be basically a marketing ploy, right? That is, say the halving may or may not be what's really significant here. It's what happens in between the halvings that really matters. Would you say that's the case, Bill?
Yeah, I've never felt that the halving itself is what's driving the price. I mean, it's supply and demand. And the supply is basically being mostly locked up by long-term holders now. The demand is increasing significantly. We all know the narrative around the ETFs in the US. That has brought in mostly retail going into 401ks, IRAs. It has not yet brought in hedge funds and large institutions that would use the securitized version of Bitcoin to increase their holdings. That's coming soon.
So let's talk a lot more about that. I just wanted to make sure that the thesis was correct, that the Bitcoin halving itself wasn't necessarily the accelerant or catalyst.
No, I think it's a question of liquidity and network effects, right? Right. So when you have a deflationary asset, right, like Bitcoin, and you have a depreciating asset in the dollar, right? You have infinitely increasing supply, and you have decreasing availability of Bitcoin, right? And increasing demand via things like ETFs and the narrative around the fourth turning, which is really starting to take hold, not just in our maxi communities, but in the real world, right? It's a recipe for continued growth. I mean, everybody focuses on the price, and that's fine. It's fair, and it does drive the economy of crypto, the Bitcoin price.
Yeah.
And so we should talk about it, but ultimately, I think we're about to see an explosion in use cases for crypto, Bitcoin especially, right? DeFi on Bitcoin, stable coins, and a whole bunch of other things that Stacks and others are working on, that I think is the really important part of the narrative for what's happening right now in Bitcoin and crypto land.
I want to dive deep into that, but for the moment, I just want to talk a few more numbers. So something like 19.7 million Bitcoin have thus far been created. I think it's just under that at the moment. And of course, everyone here knows, there's only going to be 21 million Bitcoin ever, at least probably. Jihan, let me ask you something. Of the 19.7 million Bitcoin in circulation, how much do you think is actually in circulation? Or better yet, do you think people have lost Bitcoin in the past? Is it hiding somewhere?
Yeah, it's very obvious that Satoshi already lost his Bitcoin already, right? So, and lots of other people frequently reporting on the internet, we see that. They lost their key and or maybe their house got burned and the key lost. And I think such kind of things happens a lot, especially Bitcoin was the very first cryptocurrency invented in the world. And at the early days, people don't give a shit about it, so they just carelessly.
Well, yeah, that wallet was a terrible software when you think about it, right?
Yeah. But after Bitcoin, people knows about the experience. So for lots of other coins, it's less unlikely that lots of people lost their coins.
Okay, so
I think the breakage is probably 20%, by the way.
It might be 20%.
Which is, that's 4 million, right? And so this is a non-trivial point about, the future of what the supply is and the actual math that goes underneath the dynamic of what drives Bitcoin.
And the math matters, wouldn't you say, Greg?
It matters, which I think you can't really overstate the meaning of the ETFs being added to the marketplace.
And we're talking about U.S. spot ETFs, to be very clear, correct?
Just U.S. spot ETFs. So if you took BlackRock by themselves, so in the past 3 months, they've gone from 0 to 17 billion. If in the next month, they add only another billion, that's 530 coins a day of additional demand at the current Bitcoin price. And as we talked about, with the halving, we're only producing another 450 coins per day. So BlackRock alone can by themselves swamp this market. So I think my thought for Bitcoin, and really with those that are running the ETFs, my belief is that they're being very measured with how much marketing they're doing in their own networks and in their own systems. Because BlackRock, which is the world's largest asset manager at 10 trillion, with retirement savings in the US alone at 20 trillion, they could create a bubble in Bitcoin price if they really explode the amount of capital that is allowed to go into the ETF. So I think they really need to be careful with how far they open the spigot.
Okay, so Munib, I know that being a certified financial advisor is not your day job, let's put it that way. But at the same time, what does he mean by they haven't been making use of their distribution channels yet?
Yeah,
because overall, there's about 77 billion US dollars of Bitcoin currently locked in these Bitcoin ETFs, these spot Bitcoin ETFs for American issuers.
I think the best way to think of this is that most of the ETFs, internally, they have different levels, right? So let's say they're operating at level 1, which is inbound. People were already interested in Bitcoin. They're calling BlackRock and saying, hey, I want to build a position. Can you do that for me now? And they can. The next level is when they start using their distribution channels, which is outbound. Like they are actually calling, like it's the reverse of it. And that's the bigger channel, right? And they're not doing that right now as far as from what I've heard from some colleagues. And the next level is actually automatic allocation, which is what most passive investors do, that their manager just does auto allocation from like one thing to the other. If Bitcoin becomes like a permanent part, like at whatever %, that's a lot of capital that would be flowing through these ETFs. So the way I think about the ETFs, another thing that people like don't fully appreciate is ETFs are kind of like the API to the rest of Wall Street. So now Bitcoin is plugged into the rest of Wall Street, and there will be other types of financial products that will be made, and they will keep coming out, because this is what Wall Street does, right? Like they see demand for something, they're going to not just have these pure vanilla ETFs, they're going to come up with new, more complicated, more interesting products that are built around the basic sort of like structure of the ETF, and start selling those to their customers as well.
So the theory is, anyway, that there should be even more Wall Street inflows from US capital alone, from US retirement funds, et cetera, that could be funding driving the demand side for Bitcoin. Meanwhile, the supply side we've already covered is pretty well fixed. And if anything, is smaller than the number would otherwise dictate. Is that correct, Bill?
Yeah, I mean, we are a registered investment advisor at Abra.
There
so
we go.
we're a fiduciary on behalf of our clients. I think the ETFs are a fantastic marketing vehicle. I think it's, like I said earlier, largely retail driven. You know, BlackRock basically creating ETFs on behalf of retail. The institutions are coming. But I actually think it opens the floodgates for registered investment advisors and the equivalent of the RAs in the US all over the world, especially in Southeast Asia and Europe, because those clients traditionally, they're not just buying ETFs, so they're buying ETFs of gold, they're actually buying gold. And so what's going to happen is these separately managed accounts, which are managing way more than what BlackRock is managing, it's probably in the aggregate $30 trillion globally, you're going to see these separately managed accounts start to hold Bitcoin and Ethereum and some other coins en masse, because the RIAs trusted what BlackRock is doing now for their own clients. And they're not going to want to hold an ETF, especially the wealthy. They're going to want to hold something that trades 144 hours, right? Unlike the ETF, which trades 35 hours a week. And they're going to want to borrow against it, right? Which you can do via the SMAs or separately managed accounts, which is what we offer now. And I think this has just been a fantastic marketing vehicle, because all of these RAs are coming to us now and saying, hey, you know, what's the right way for me to offer this to my clients? And you said, well, it depends who your clients are, but large, high net worth clients, they don't want to hold ETFs. They want to hold something they can borrow against and is tax efficient and trades 24/7. If you were holding $50 million of Bitcoin and you need to sell a little bit on Sunday because, you know, some war was about to happen,
you can't do that
you
with your
can't
Wall
do
Street
it.
account.
That's right.
Okay, well, there's another thing that we should mention. We've been talking a heck of a lot about the US, but I'm pretty sure we're here in Dubai right now, and the United States is only about 3% of the global population, even if it's a slightly larger percentage of global GDP. John, you're from Singapore, and you've also happen to have an asset management firm, you know, that you've helped co-found. Do you see demand for Bitcoin increasing in countries beyond the United States?
Yeah, of course. I think the increasing for Bitcoin outside of the US will be much faster than inside the US, because Bitcoin is kind of a gold-like asset that people want to hold it as a kind of hedge of the ultimate political or geopolitical risk. And such kind of sense of insecurity, I think, is much, much stronger for the people living outside of the US than inside of the US.
As an asset for them to secure their wealth, to store it somehow.
Yes, for example, what if the local currency collapsed? What if the local government doesn't allow them to take money outside of the country anymore?
Capital controls.
Yeah, and if they hold gold is not very easy to carry on the plane and get away, especially in wartime, and everything like gold will be freezed. What if you want to send your wife and kids to London to have a safe life, and you have to live inside the country to fight? Gold cannot be carried away, but Bitcoin can. So such kind of a situation, such kind of a worries is more obvious for people that are living outside of the US.
So it's even more reason for people to own Bitcoin.
Yes.
Well, let's talk about things beyond Bitcoin as digital gold. That's pretty much what we've been talking about here for the most part. It seems pretty interesting. What about Bitcoin as digital oil? That is, say, fuel to be used. Now, there was a point in time, I want to go back in history, where there was this project called Rootstock that was trying to go and build smart contracts on Bitcoin or adjacent to it. Then there was another project called Stacks. I don't know if you've heard of it, Munib. It was trying to do this as well and kind of a lot more whiz-bang. But now it seems like everyone wants to be a Bitcoin layer 2. Am I crazy, or are there like 50 of these things right now?
No, I honestly think that this is a very, very large market, and we're at a very early stage of it. Because if you look at Ethereum, I think depends on when you measure, how you measure it, but something like 35% of the capital, ETH capital, is actively deployed. Like either earning, the base yield from the protocol or deployed in smart contracts. Basically, it's productive capital.
So it's not like, for example, Ether sitting in an ETF doing nothing. It's making money or doing something like that.
It's like a productive capital. It's actually deployed. If you look at Bitcoin, which is the best form of money, like it's the most pristine capital that we have, less than 1% of that is deployed and doing anything.
Yeah.
And that even if 10% of that gets deployed, that's hundreds of billions of dollars that's just sitting there, which developers can actually program against. So it's a massive, massive opportunity. And I think we have just been sort of like, we never had the right infrastructure and the tools. and the industry sort of like found it easier to go and start other networks. Like I know the Solana guys, Raj was here, or Avalanche is here. Sometimes it's easier to start new networks than to try and build around Bitcoin. So that was the hard thing that people at Stacks and some other project they kept doing. And now I think the technology and the infrastructure is ripe enough that it's relatively easy for people to come and build these L2s. And I think that's like massively happening.
So the L2s are going to exist, apparently. Are you telling me that there's going to be applications running on Bitcoin, like Bitcoin DeFi is going to be a real thing?
Yeah.
What's it going to be like? And the reason I'm asking is I want to understand what that means for market dynamics later on, and we've got the experts here to talk about that.
Yeah. So think of it this way, that even if you look at Ethereum, when the gas fees go up on ETH-L1, most of the traffic is moving to ETH-L2s. Even if you go to Ethereum conference, right? Like most people are just talking about L2s. There's Arbitrum, Optimism, Base, like all these
Very hard
things.
to run a DEX on Ethereum mainnet.
Because the gas fees go up. Like it's just a user demand thing. Like you can't have millions of users using ETH-L1 because the gas prices are going to spike and then they have to go to L2. The same thing is happening on Bitcoin because of projects like Ordinals and other BRC20s. The gas fees did a 500x increase last year. And I think they're about to go crazy.
This is with Ordinals, when that kind of became a meme.
When Ordinals happened.
Yeah.
So I think for the first time, people who are using Bitcoin, they saw how expensive it's getting. And then it's very easy to do the math that if the L1 is sort of like not working because it's like so expensive, people are going to start moving to the L2s. But the Bitcoin L2s aren't ready yet. Even Stacks, like Stacks, there's a current version that is sort of like slow like Bitcoin, like every 10 minutes a block comes, the network capacity isn't very large. And the main version that we've been working on for the last 2 years or so, that's actually going live very soon. And I think that I would consider like the first good UX L2 that would be live for Bitcoin. I think that's a pretty big deal.
So there's none now. I want to make sure, again, we have a state of affairs. Where today there's a lot of real, I'm going to call it non-ordinals, non-Bitcoin trading transactions, maybe some minor transactions happening on Bitcoin. Is that correct?
They're at very early stages.
I'm paraphrasing.
Like even if you look at Lightning, like Lightning has been around, some people use it, but in terms of like, hey, is it really easy to use yet? No, more work is needed. There are liquidity issues, there are routing issues, and so on. Same with Stacks. So I think some projects are there, like there are 4 of them, but now there are 50 more launching, right?
Yeah.
So that's exciting. Like, now it's a category, and people are going to throw a lot of experiments out there, and some of them are going to stick. Some of them are actually going to work. And I think most people would actually end up using BTC on L2s rather than L1, like a couple of years
is
from now.
value going to accrue to the Bitcoin network from these L2s? Because this is something I've got to tell you that other layer ones are worried about, right? Which is to say, are transactions actually going to appear there? Are we going to see more transactions and transaction fees for Bitcoin miners? What do you think, Greg? Do you think the L2s are good for Bitcoin?
We've seen the transaction fees starting this May. There was a step change in the fees that miners are actually recovering from network utilization, and that was largely related to the ordinals. And I would be surprised if that reversed course. So I think fees and transactions on the network, it seems to be that we're still early days, and that step change happened really this year.
And so, in 2023, right, with the ordinals coming out.
2023.
And so, Jihan, I want to ask you as well. Do you think ordinals are going to stick around? Because we did see an enormous rush at the time, but we also saw that a lot of Ethereum-based NFTs didn't last. Do you believe in ordinals? And the only reason I ask is I want to understand if it's going to have a permanent impact on Bitcoin.
Yeah, I think the ordinals will be there because ordinals can be, it's not only about kind of fungible tokens or JPG pictures, NFTs. It's also going to be programmable, can be kind of a foundation for the security of some other layer 2s. And people also think highly possible that some new opcode like OPCAT will be enable more programmability for the Bitcoin layer 1 to enable the Bitcoin layer 2. So I think ordinals will be there because ordinals is much more than the pictures and NFTs.
That's very interesting. So ordinals can be more than just for those in the audience, than essentially a Bitcoin version of an NFT that could be used for stablecoins? Sure.
Yeah, I think it's almost like a standard to embed data on the L1. People are using it for all sorts of things. There's like a news service running where people are embedding like news articles on chain. They're like archived forever. So that's just like one example. But in general, like I think coming back to the question you had about impact on the value of BTC.
Yeah.
I think Bitcoin is only going to become more and more valuable because of these use cases, right? Like think about L2s. Like L2s are like, you know how ETFs are buying up Bitcoin and sort of like, you know, it's like a black hole for Bitcoin, and it increases demand. L2s are like that. Each L2 would attract like hundreds of millions or billions of dollars of BTC capital to go into the L2, increasing demand for Bitcoin. These L2s will be competing with each other because they all want to attract the Bitcoin TVL to come there, right? So they're going to have very interesting sort of like impact on how valuable BTC actually becomes because there's more demand and there's more usage of it.
Okay, so I'm seeing a supply shock on one side. I'm seeing Bitcoin demand increasing from Bitcoin ETFs, from evidently Bitcoin utility. Is this correct, certified financial advisor?
I mean, look, the interesting thing about ordinals is that there's a fixed number of satoshis that you can put meta information in, which is what creates the value, regardless of what you're using it for, whether it's to store a picture of a wizard or a key that unlocks a door or whatever the application is, right? Unlike Ethereum, where you can create an infinite number of collections, each with an infinite number of tokens inside those collections. So that's interesting, right? I think for me, the thing that we're most excited about is that, you know, we see a natural interest rate on Bitcoin, which for us is clearly the biggest driver of our wealth management business. Like 90% of deposits
Wait, did you say an interest rate for Bitcoin or interest of Bitcoin?
No, interest rate for Bitcoin itself.
Oh, I see.
Right? People wanting to earn yield on Bitcoin. Today, that the vast majority of that is, well, for us, 100% of that comes from DeFi, which means we're wrapping Bitcoin to use it on the Ethereum network, which today, which, you know, on the surface as a Bitcoiner makes no sense, but there's no other way if it's DeFi based. And so that has a complexity. It's a centralized process, even though there's a DAO that manages it. It costs several basis points of the amount of Bitcoin that you're wrapping and unwrapping to create the wrapped Bitcoin. And it's not an efficient process. It's great once you're in the DeFi contract, but until then, you've got all this physical real world stuff to do. If there was a way to do that in a Bitcoin native model, it would be faster and cheaper and optimize this kind of, you know, natural interest rate we're seeing. Because the interest rate is probably 8 to 10% right now, which is really interesting, but it's not for the faint of heart in order to get there. Right, and so, you know, we're good at extracting because that's what we do. But it, you know, it does come at a cost. It's not, you know, easily scalable. And doing that on Bitcoin itself just makes a lot of sense. And, you know, it's not there yet, but I think it's coming.
So, Bitcoin mining, one of the big issues I think that we've seen, I think this is something we should present to everyone, is that there are a lot of detractors against it. And I wonder, because we've been really optimistic here, do we need to be worried about Elizabeth Warren and other people in the United States and elsewhere who are imposing energy taxes on Bitcoin? Could this hurt Bitcoin, Greg?
Yeah. So hey, the biggest miners in the U.S. all got letters from Elizabeth Warren, you know, sort of asking, hey, how much do you pollute? It's pretty, you know, pretty nasty sorts of questions, obviously with the intent to either regulate or tax miners, which I think is sort of missing the point. In the U.S. and most of the world, we don't decide which uses of power are good versus bad. So if we start taxing Bitcoin miners, should we tax social media data centers or distilleries or casinos? So we haven't done it yet, and I think it's unlikely to happen. But Bitcoin miners are big consumers of power, so we're easy to target, which I think we could do an entire panel on sort of the coming crisis to the US power grid, which has not had demand for about 15 years. We're now going to see demand of about 100 gigawatts in the next 5 years.
Well, it's not just Bitcoin mining. It's true also there's a lot of AI, high threshold compute, correct?
Well, and for miners, like miners might add, say, 10 gigawatts of the 90 or 100 of incremental demand. So for the first time in the past 15 years, we're having to compete with a better capitalized group of superscalers that don't care as much about the cost of power. So that will be a headwind for our industry, probably more than any potential regulation.
What are the other risks? I mean, again, I don't want to be too optimistic here because everything I'm hearing is so great. There's got to be something bad coming up the pike.
Like in risk to
risk
Bitcoin?
to Bitcoin.
I think in some ways, like, you know, it's still early days, right? Like we're a lot of people think that they're late to Bitcoin, and I keep telling them that everyone is early to this technology right now. Like, imagine at some point billions of people will be using it, right? Like, we're nowhere close to that right now. But I do think specifically Bitcoin itself has been de-risked a lot. Like, this network has been running for like 10 plus years. The software is getting more mature. There's a culture of like just not changing Bitcoin L1 that much. And I think once the L2s take off, that will actually even ossify Bitcoin L1 even more. Because there will be a very strong argument that why are you trying to mess around with the L1 when you can do the experiments on the L2, right? So I think L2s would actually help ossify Bitcoin and in some ways even like de-risk it. Yes, the L2 itself might be more risky, but then it's more like a hot wallet, right? Like your cold wallet is always like Bitcoin L1, and that's where you keep most of your savings.
Bill, is there a centralization risk? I mean, at the end of the day, Bitcoin could conceivably be 51% attacked.
Yeah, maybe, but look, this has been an existential risk. In the very earliest days of Bitcoin, the Reddit speculation was always, a government could buy, go to Jahan and buy all the ASICs and, make Jahan the first trillionaire, but own the network.
John, you wouldn't sell the government all the ASICs, would you?
No, it's undoable.
Yeah.
It's it was better to attack Bitcoin 10 years ago, and right now I think it's impossible to do so.
It's untenable now.
Yeah.
Yeah, it's untenable now. And so I think there is no existential risk to Bitcoin at this point. I think all the use cases we're talking about are fun and speculative. I think I'm excited about stacks and other applications. But right now, Bitcoin is really good at one thing, and has been good at one thing. And the network just gets harder and harder and harder, and that's what we want. We want a hardened network, and it's the most impressive piece of software technology that we've ever created, as far as I'm concerned, and it's really good at one thing. And a lot of these applications we're speculating about are actually much better suited for Ethereum and Solana right now, and that may change over time, but it's not the case today, right? And so we should be realistic about how things work and why, right?
Jahan kind of touched on this a little bit as he was describing why there was more demand perhaps for Bitcoin in countries outside the US. But certainly it does feel like we're entering a moment in time historically where there's going to be a lot more conflict. And the libertarians since the very beginning have been saying that Bitcoin could be a hedge instrument against political and geopolitical instability. Is that still true, Munib?
I'll tell you a personal story, right? So I had to I usually don't travel on planes with Bitcoin on me, right? Like, you should never do that. But for whatever reason, for work, I had to travel with some amount of Bitcoin. I wouldn't say how much. And then I was telling my team that, can you imagine if I had to transfer this X amount of value in gold bars? Like, how, so imagine.
Or even stacks of cash.
Or stacks of cash. It's just impossible. You wouldn't be able to fly. You wouldn't be able to carry that much money with you. And with Bitcoin, it was like seamless. It's like a USB drive. Nobody even notices it, like even through like security checkpoints and whatnot. And I think that thing is very real, especially in terms of conflict. If you want to have your life savings with you and you're actually moving countries or moving cities or traveling around, that's a very real thing.
Greg, what do you think?
A lot of the Bitcoin narrative is around like the coming collapse of the US dollar. And the stats just don't, like, hey, I'm a huge fan of Bitcoin, but not because the dollar is going to fail in the next 10 years or 20 years. So the stats that support it, I actually brought it with me just to not mess it up. US GDP today is 28 trillion. In 10 years, expected to be 42 trillion. US debt right now is 35 trillion, expected to be 54 trillion. So the fact is the extra, say, 2 trillion a year of deficit spending is resulting in a pretty big GDP growth. That's keeping our debt to GDP ratio still around like 1.25 to 1.29.
Okay, so the point you're trying to say is the U.S. isn't going anywhere and Bitcoin's still going to do well. Is that correct?
The sky isn't falling.
When I say U.S., I mean U.S. dollar.
Yeah, don't buy Bitcoin because the sky's falling on the U.S. dollar. It's going to take it will ultimately happen. It is a slow train wreck. We're going to crash the currency, but it's going to take us a couple generations to do the job fully.
Yeah, but Bill, are people going to buy Bitcoin fearing this anyway? I mean, again, from a pure pragmatic perspective, are there the same people who are buying, I don't know, gold bars or digging trenches to save themselves from the coming apocalypse, are they buying Bitcoin?
No, so I think let's break down what's happened just in this past week and put it in perspective, right? So we all saw what happened this weekend, drones heading to Israel, the price of crypto fell, price of gold went up. Unfortunately, this morning we saw what happened. Price of crypto immediately fell, price of gold went up. Why is that happening, right? Well, it's very simple. Hedge funds, sovereign wealth funds, governments are protecting themselves by buying Bitcoin, by buying gold. They're buying gold immediately. They're not buying Bitcoin. They will eventually, but they're not now, right? It's retail investors that are afraid because right now, on its path to becoming the digital gold, the safe haven asset, it is a risk-on asset. It is, but it's on its way to becoming something else. We want it to be there, but it's not. It's on its way, okay? And so that is what is likely to continue to happen until those same institutions, sovereign wealth funds, governments, are willing to make the same purchase of gold in the digital form of gold. And they're not yet there. That's why you see this disparity. Now, as a risk-on asset that has a fixed float, I'm talking about Bitcoin specifically, that is going to drive the price narrative for another decade in terms of exponential growth. And that's still going to be based upon liquidity and network effects, right? So that's going to, independent of war, which is always going to have a negative shortest term. Usually after a war starts, risk-on assets explode, right? And so that's what I predict is going to happen here as well. And so that is going to continue for Bitcoin probably for another 5 to 10 years.
Well, I want to focus on the next 4 years for a moment, okay?
Yeah.
Because supposedly tomorrow we're going to go and see the Bitcoin halving. That big celebration where I'm hoping all of you guys are throwing parties, I will be attending. But 4 years later, we're going to see another halving. John, what is that, 5th it'll be? What are you most excited about for Bitcoin in the next 4 years? What do you think might be something transformative that we should be looking forwards to?
I think it's about the social consensus around Bitcoin as better gold, because right now we still can see, as Bill said, the institutions still haven't realized that the Bitcoin actually is much better gold than the physical gold.
The institutions haven't realized it yet, you think?
Yeah, because I think 4 years from now, people will know that for private sector, Bitcoin is much better, and only for those central banks and the governments that they couldn't or they haven't, they don't have the need to run away from their own countries. They just store gold, and for all the private sectors, they will place Bitcoin over gold as a kind of hedge for their risks.
What do you think? Next 4 years, what are you most excited about?
I think one metric that I would be very excited about is when the Bitcoin transaction fees or gas fees, they become more than the Coinbase rewards. So the next halving, the miners would actually be making more money on network usage and not on just the block rewards, because the block rewards are going to continue to go down. That would mean that the network is now self-sustainable.
So it's not reliant at that point upon
it's not reliant on
Bitcoin block rewards to secure the network, and it's still sustainable. Greg, are you guys modeling that in are you thinking about that?
That's not something that we underwrite like in our annual budget, but we just sort of take it as a bonus, when it happens.
Transaction fees.
Transaction fees.
For now.
For now. But it should become a part of the future of the mining reward.
And Jihan, Bitcoin DeFi, I just want to ask about this. This is kind of a subset of everything. It may or may not affect Bitcoin price. Seems like people think here it will. But do we think that we're going to see the types of trading volumes on that as we have, or even more, on Ethereum and Solana-based DEXs, for example? Do we think that DeFi is going to take off on Bitcoin? Because to me personally, that's what's most exciting, which is native DeFi.
Yeah, I think maybe right now the problem for Bitcoin Layer 2 or Bitcoin DeFi is there are too many competitions, and the winners is not so obvious. But I think maybe take another 12 to 18 months, we will see who is going to be the winner in the Bitcoin Layer 2 competition. And at that time, I'm not sure it will be much higher than Ethereum, but I think it will be comparable at the same volume. Yeah.
To you, Bitcoin is more than just an asset. I think you're a real believer. So I've got to ask from a, I guess, practical perspective for society, what do you think Bitcoin can do in the next 4 years?
Yeah, I mean, my hope, I'll give you two perspectives. My hope is that we get to a point where, as the people's money globally, that Bitcoin can be used peer-to-peer the way it was originally intended, even if it's via layer 2s and interacting via stablecoins created on the Bitcoin network, maybe synthetic as well, so that we're not relying upon government-related regulated banks to store the underlying dollars to become a true peer-to-peer network. I think that's going to take more than 4 years to become a real thing. But I think that with all the competition that we're seeing now among startups to do this, we're going to see the first live use cases of that purely on Bitcoin in the next 18 months, and I'm excited about that.
Well, I hope to have this conversation again 4 years from now when we celebrate the next Bitcoin halving. Thank you, gentlemen, very much. It's been a great panel.
Thank you.
Thank you so much.